2, 1. All right. Hello, everybody. Sorry for the delay. Some technical difficulties here, and we got those all worked out as we continue to learn this platform and how to use it. Jude Sandoval with Dream Homes by Jude and John Edwards with Castle and Cook Mortgage on our weekly real estate revelations. And yes, I know we are one day late, but you know, when closing and business and getting things done, getting away, we have to postpone things a day. So thanks everybody for waiting. I know that you've been waiting anxiously for the day to learn about FHA loans, when to use them, why to use them, and what happens if you don't have a down payment for your real estate purchase. So we're going to jump in right now with John Edwards. Hey, John, out in beautiful Evergreen, right?
Evergreen,
where you're at today, out in beautiful Evergreen. Did you get a lot of snow out there last night?
A couple inches, maybe. Not too much. Most of it's melted right now. So
that's the beauty of Colorado. Yeah. Don't tell everybody on out there because, well, no, actually tell everybody.
I think the word's out.
They can come. Yeah, it is really. No kidding. They are already coming here already. So that's good. Just make sure to call John to get your loan done and me to find you a house.
Exactly.
If there's any listed. So.
Yep. All right, Jude. So without further ado, we'll get started here with our presentation. So FHA and down payment assistance, getting to know FHA loans and down payment assistance options. And I know, Jude, recently we've actually done a very similar webinar, but wanted to bring it up again. It's just a question that I get a lot from a lot of the real estate agents that I work with is, hey, my clients don't have much money to put down, or, you know, they've got a bad credit score, they had a bankruptcy or whatever it is. You know, they're having trouble getting clients approved, or they're either declining them or trying to approve them before they even talk to a lender. So wanted to talk a little bit more detail about some of these items and add a little bit to the presentation as well. So today we'll talk a little bit about what is an FHA loan, who can offer them, who's a good candidate, basic FHA guidelines, some down payment assistance programs, basic down payment assistance guidelines, and some common themes for those down payment assistance. And then as always, we'll recap and wrap it up a little bit. So let me ask you, Jude, when you're talking with a client for the first time, do you hear them a lot of times trying to qualify themselves or disqualify themselves about buying a home before they've talked to a lender?
Yeah, let me, to your first point there, it makes absolutely no sense whatsoever to start your real estate search without having been pre-qualified and talked to a lender. And that doesn't mean just calling, that 800 number you heard on the radio and getting something done through the phone. It means sitting down, talking, getting all of your documents together, all the things that you loan officers want to make sure to have done. If your real estate agent is not supporting the loan officer or not asking you to do that first and foremost before even looking at a property, go somewhere else, because you're just gonna waste your time and you are going to absolutely beat your head against a wall, because no sellers, or at least sellers that and listing agents that are really strong and ready to go, are not going to be accepting an offer without all of that information.
Yep, absolutely. All right. FHA loan. So Federal Housing Administration, or FHA loan, is a loan that is backed by the federal government. It has been in place, and by it has been in place, that's the Federal Housing Administration, since the 1930s. So FHA loans have been around for quite a while. Their goal is to help stimulate the housing market by making home loans more accessible and more affordable. Offered by most, not all lenders, but most lenders, and you do have to be approved FHA lender. FHA loans by design have easier guidelines. They're designed to help more people purchase homes. The comparison to an FHA loan would typically be a conventional loan, which would be a Fannie Mae or a Freddie Mac guideline loan. But if you couldn't do a conventional loan, or in some cases it makes more sense to do an FHA loan, we definitely want to take a look at all the aspects of both loans and make sure that you're in the right loan. And they're great for borrowers that cannot do conventional financing, or have, considerably lower credit scores, or may want down payment assistance programs, because most programs for down payment assistance work very well with FHA, Some work with conventional VA and USDA, but pretty much all of them will work with the FHA.
Hey, John, let me ask you real quick. Why is it a positive that the loan could be backed by the federal government?
Well, it allows, first of all, for lenders to do loans for people that they otherwise would not be able to do, or they're able to help more people that they typically wouldn't be able to otherwise, because they have to, any lender or even Fannie Mae or Freddie Mac guidelines are designed with what has happened in the past, right? So they have to learn from mistakes that they've made in the past, which means they have to limit their guidelines, which means that not everybody can purchase a house. And even with FHA, not everybody can purchase a house there, but even more people can purchase a house. And so hopefully that helps address your question there.
Yep, absolutely.
All right. So basic FHA guidelines, I'm not going to dive too deep here. If you're out there and you have a question on FHA or any other type of residential mortgage guidelines, feel free to reach out to me at any time. But basic FHA guidelines allows for lower credit scores. So minimum 580 credit score is what we can offer. That's as low as we can go here at Castle and Cook Mortgage. Debt to income ratios are higher typically than conventional loans. Minimum down payment on an FHA loan is 3.5%. And that particular piece, Jude, I think is what makes FHA loans so attractive to so many people, is you don't have to have all that much skin in the game.
So, John, a lot of times I get people that say, I can't buy a house. I don't have 20% down.
You don't have to. I mean, the moral of that story is you don't have to, and you don't have to. We've talked about it before. Have tens of thousands of dollars or hundreds of thousands of dollars to put down on a house to purchase a home. There's a lot of programs out there. FHA is probably the biggest and most well known, but there's a lot of programs out there to help people to purchase homes, and we'll talk some more about that today as well. So it can come from in the 3.5%. Most people, or I don't know about most people, but a lot of people don't necessarily even have that just sitting in their savings account, Jude. Yeah. So you can get that 3.5% from a few different resources. It can come from a gift from a family member, a grant program, a down payment assistance program that may have like a second mortgage attached to it. Or it might be in their savings account or their checking account or perhaps an investment account, something like that.
Yep. And actually there's even a new way to do that, a crowdsourcing online platform. Now, I don't think you can do that via FHA loan, but I think it's Freddie Mac or Fannie Mae approved as well. So you can go online, you can set up an account, and I think we're going to maybe investigate that and do one of these real estate revelations, because then you can just be passively asking all of your friends to finance your down payment, right?
Yeah, absolutely. So next one on here, primary residence only. So that's important. You cannot use an FHA loan to purchase a second home in the mountains, at the ski resort, or an investment property you intend to use as a rental.
Okay, so the government doesn't want to be backing your investment properties, basically.
You got it. Exactly right. It's designed to help people purchase a primary residence only. Now, a primary residence can be further explained as a single family residence, a condo, a townhome, or a 2 to 4 unit property. So yes, you could buy a 4-unit property as long as you live in one of the units. Even if you rent out the other 3, it's still considered your primary residence and you can purchase it as such. Be careful on condos. If you are only eligible for FHA financing, you need to make sure that whatever condo it is you're looking at is approved for FHA financing. If not, you cannot purchase with FHA in that particular condominium complex. And you run into that before, Jude?
Absolutely. Run into that a lot, because there are a ton of complexes out there that don't meet the occupancy ratios necessary to qualify for FHA financing, and oftentimes the listing agents don't have that listed properly. So it's critical that before you get too far down the road in your offer in the financing and getting your hopes up about the purchase, that gets researched and confirmed. And that's
Yeah.
something you can confirm, right, for any agent, correct?
Yeah, so Jude, that's both your and my job ahead of time before any borrowers end up looking at a condo that isn't eligible for financing, if it's FHA or even VA. That's your job, and it's my job to make sure that our clients are out there looking at the right homes that they can actually put an offer on if they like it. Because the worst case scenario, and we've worked with real estate agents who have done it in the past, they've shown a bunch of condos, and of course the one that the clients loved the most was the one that they couldn't do FHA financing on. So
Exactly.
just got to be careful there.
And let's clarify.
Yeah.
Let me interrupt you for a sec. Let's clarify quickly what that means being approved is that FHA and VA and FHA, because they're government-backed loans, the association needs to get approval from FHA in order to have that financing qualify for that property. And there's the process that the association goes through in order to get that approval. And there's several hurdles that they have to do, some documentation that they need to provide in order to get that done. And the reason being is that the government wants to know that that property is conducive to their goals of the financing.
Yeah, exactly. Yep. And there's an online resource that you can use to check specific HOAs to see if they're eligible or not. We're always happy to look them up and let our agents and our clients know. So whatever we can do to help out there, but you can find that information online as well. All FHA loans will have upfront and monthly mortgage insurance. The upfront mortgage insurance premium, as it's called, is 1.75% of the loan amount. And Jude, that actually gets added onto your loan to become what's known as your total loan amount.
Can you pay that up front?
That's important to know. You can. You have to pay it in full, but it can be paid up front. So seller concessions could be used to pay for that. Yep. And then they're going to also have annual mortgage insurance, which will be divided by 12 basically and paid on a monthly basis. If you're putting down less than 10%, it would be 0.85%. If you're putting down more than 10%, it's 0.8%. So some important keys to keep in mind there. So down payment assistance programs. So we talked a little bit about these before, Jude, but they're great programs, and I like to bring them up as much as possible to help try to educate people so that they know what's available out there. CHFA is Colorado Housing and Finance Authority, and that'll provide a 4% grant or 5% silent second. A silent second means that at the time that loan is paid off, whether through refinance or purchase or selling the property, it will need to be repaid at that time. Have you done many transactions, Jude, that involve down payment assistance programs? They're fairly rare, but they happen on a regular basis.
No, actually, I do quite a few of them, John. And so the other question I get from folks a lot is, we talked about, well, I don't have 20% down. But the other one is, I've got a great job. I've got a good credit score. I work hard. But I just don't have any money for a down payment. Trying to save and save when life is happening has been, virtually impossible for me. And that's when I say, well, you know what? There are options for you. Some of these down payment assistance programs, which seem like they're almost free money. I mean, it's not free. It's worked into the loan and how the interest rate, et cetera. But it is upfront free money in order to get you into the home and in order for you to be able to purchase a property. So, the grant, whether it's a grant or whether it's a second or whatever it may be.
Yep, absolutely. So the next one here is CHAC, or the Colorado Housing Assistance Corporation, a second mortgage for first-time home buyers with varying repayment options, up to about $10,000 for down payment and closing costs. Metro Mortgage Assistance Program is a grant of 4% with required 0.5% minimum payment from borrower, and then limited to just the Denver metro area. And then Chinoa, which is a relatively new program for us, will provide a 3.5% for the down payment, and there's no income limitations on that.
All right. So can we talk? Can you run us through Actually, looks like you're going to do that now. Guidelines and kind of common things, just like a scenario, what a scenario would look like.
Exactly. So, these are just some sort of common themes and guidelines when it comes to down payment assistance. These are some things that just to kind of keep in mind when you're thinking about doing down payment assistance. So there are many programs that are available out there. I just named a couple of them. They're going to have their own rules, their own guidelines. Most will determine their own rates and additional closing costs. They can be a grant or a second mortgage. Minimum contributions from borrowers are going to apply. Typically, you're going to need to bring at least $1,000 or so. Usually have income and loan limitations. Typically have minimum credit scores and debt ratio limitations as well. And will usually have higher interest rates and higher closing costs, resulting in higher monthly payments.
Gotcha.
So things to remember for sure on those. And in the key too, and we've talked about this before, Jude, is really to have, the pre-approval, especially with down payment assistance programs, your pre-approval in place, and that your lender knows and understands those programs, because you don't want to be out there showing homes and, your clients think they can use a specific program and they can't.
Right. And I want to, I want to talk about a scenario where you can literally get in with little to no money down, and how that happens. So anybody that's been watching is going to get rewarded by watching to the end here. And that is through an FHA loan that would have, a 3.5% down payment, but by using the down payment assistance, the chaff of the check, whatever you may be doing, you can come in with as little as $1,000 down. And if you get a seller concession for the closing costs, to pay those closing costs, you can literally get in with $1,000 or less if your seller concession is high enough in order to close the property. I've done that several times with clients that they're absolutely amazed that really I can get into a home with $1,000 or potentially even less than $1,000. And the answer is absolutely, positively, we can do that. But you've got to have a phenomenal lender that understands and has got all the ratios, has looked at this, has put the package together airtight, and a real estate agent that knows what they're doing, what kind of property to find, and how to negotiate that with the seller.
Yeah, yep, absolutely. Well, very well said, Jude. So just to kind of recap and wrap it up a little bit, FHA loans can be great options for the right buyer. Lenders should carefully review options with the borrower to ensure that they are getting the best loan for their particular situation. FHA loans are designed to help people purchase homes and realize the American dream. More favorable guidelines. Again, FHA is really designed to help people to purchase their primary residence and to own a home, which, all part of the American dream. Down payment assistance might just be the missing piece for your clients to be able to buy their new home. But if they have the money, it will likely result in a better long-term loan. And what I mean by that, Jude, is just because you can do something doesn't necessarily mean that you should. It's great to know all of your options. But you might have some money in a retirement account, or maybe your grandmother's willing to give some gift funds, or your parents or something like that. If you're bringing that 3.5% to the table as opposed to using a down payment assistance program, you're going to have more favorable lending terms, which is going to be more beneficial over the long term.
Yep, and that's where coming in, sitting down, and spending the time before with you makes better sense.
Yep. And then while DPA programs or down payment assistance programs are great short-term options, they may carry higher interest rates, higher closing costs, higher monthly payments. So all those things need to be taken into consideration. And when you're considering, purchasing a home. And again, if you don't have the money, they're great options. If you do have the money, weigh the options back and forth.
Awesome.
All right, Jude. So that is my presentation for today. A little bit more information on FHA loans, down payment assistance programs. Our goal here really with the webinar is just to provide education for folks. Usually it'll be specific to folks living in Colorado, but a lot of this is going to apply nationwide.
Absolutely. And if this has been a benefit to you, please do us a favor and share it across your Facebook. You can also find us on YouTube as well. Write a comment below. If you have questions, you can click on the, you can either private message through Facebook, or there's an email link here as well that you can send us a question, and we'll both get those questions and get back to you with answers. But the more you can share, the more you can like, the more that social media and social proof will definitely help us get this message out and get more people to be able to purchase property and or sell property.
Yep. Sounds good, Jude. Well, thank you again for this week on our Revelations, our Real Estate Revelations webinar, and look forward to talking with you again next week.
All right, Jonathan, real quick, where can people get a hold of you? I know they can see it on the screen, but in case they're auditory and they want to hear it and write it down, what's the best way to reach you?
I can be reached at 303-921-5747. And again, I'm with Castle and Cook Mortgage, and my NMLS is 671258. And Jude, how can people get a hold of you?
That was going to be my next question. Make sure you're compliant. What's your NMLS? But you got it there.
Awesome. It's all over the screen, too. So.
All right. Yeah. And you can reach me at 720-255-1021 or jude@judesandval.com, or take a look at the website at dreamhomesbyjude.com. So, John, stay warm up there with the family and Evergreen, and I hope they're feeling better. I know I've had some sick kiddos also. And
no fun.
No, I know it's not. But, hey, have a good weekend, and then we'll see you next week.
Sounds good. Thanks, Jude.